People think that they're saving money by being their own super. They're not. Once 2008 hit,
what was that
everything
like?
changed. If it's somebody who owns their house today and they have a rate of 2.5%, they're not necessarily choosing a renovation loan unless they have zero other options. The window person's only installing one window. They are like, I'm not going to fill out forms for one window. You're crazy.
What other impacts have caused you to just do way fewer renovation loans?
It's all about the rates.
I'm Joseph, back here with the Design Build Show. And today I'm going to be talking to Vanessa Rez about remodeling financing and different ways you can finance a remodel or a new home construction. And so I'm really excited about this.
Me too.
And why don't we start out? Some of this I don't even know, but talk to me about, like, how did you get into the lending industry, period?
Oh, myself. So I decided I wanted to be a lender in about 25 years ago. So I was working as a personal shopper at Nordstrom in West LA, and I had fallen in love with a guy who lived in Oregon, and I knew I was going to be moving to Oregon. So I thought this is the time to maybe change my career. And I got a job as a loan officer assistant at Chase Manhattan. And that's where I started doing construction loans and renovation loans. So I went from Nordstrom to the customer service that I learned in Nordstrom is probably like the best thing ever, because it was back in the days of Nordstrom, like the good old days of Nordstrom, where the customer's always right, anything goes, and that's how I learned. So then I moved my skill set to mortgage, and I didn't realize that when I chose to work at the company I did and the people I was working for, that they focus only on construction loans.
Interesting.
So that's what I learned, is construction loans from day one.
And why like lending and mortgage as opposed to like anything else that you could do with your life?
Well, I see it as a puzzle, so I'm a big lover of puzzles. And then also when I was working at Nordstrom, a customer of mine at Nordstrom, so I worked in the men's department, and he would come in at noon and he would shop. And so he and I just became friends. And then right when I was taking a college class at that time, and my college class I had to write a paper, and I had to interview somebody. I had to interview 3 people that had careers that I might be interested in. So I asked Mark, who was a loan officer. I said, can I interview you? And he's like, yeah. So we went to lunch. I interviewed him. And that's when I realized that the things he was telling me about the industry fit me. And so he's actually the one who helped me get the job at Chase Manhattan when I moved to Oregon. So he was my customer in LA. He worked at Chase. He got me a job in Oregon at Chase as well.
That's awesome. Yeah. I love that story. It validates some of the things that I think about when we think about hiring people on our team, in that the very best people like leave a wake in their past of like people who really want to help them succeed. And they've like contributed a lot of value to everybody in their past, and those people want to help push them forward and lift them up. And that's awesome. Yeah. I love the story.
Yeah, it's good. And it taught me to ask for help, right? If I wasn't interested in what he did and then asked him for, help trying to find a job up here, I wouldn't have had that opportunity. So It just taught me, ask for help. It's okay. Yeah. So I still do that. I ask for help all the time. If I don't know the answer, I will ask.
That's awesome. I love it. And so you got right into construction loans, and when was this? Like, what year was this?
So that was 2002.
Okay.
And so that was pre-2008. So before, mortgage changed completely, and doing a lot of just new construction financing, all different sizes of new construction.
And probably like awesome time to be in construction financing, 2002, 3, 4, 5.
Super busy. We still had, at that point, even though we were doing construction loans, it was a stated income, stated asset environment. So it was really a lot easier to qualify. You didn't have to have as much documentation. And then once 2008 hit,
What was that
everything
like?
changed. So I was doing a lot of ground up construction, and then when 2008 hit, then the property values were not going up; they were going down, and so all of a sudden there's like no ground up construction happening.
Yeah.
And so I shifted to renovation financing because at that point it went from new construction to people needed renovation financing more than new construction.
Was it just like dead for a period of time? Like how long did that shift take to where you're actually getting like renovation loans coming in, or did it happen pretty rapidly?
So it was never dead because the interest rates got really good.
Sure.
So the market, the market shifted with what people could qualify for, but then rates got better, and then we're really busy with refinances, and so it was never like, a year where I have nothing because I haven't thought about my business. I thought about my business and I just shifted to renovation.
Sure.
I think it helps because I don't mind learning new things. And I know that sometimes it's hard to learn new things. So I learned them early on.
That's great.
Yeah.
And so then you did renovation primarily starting 2008.
Yep.
And that you kept doing that. Was there any significant change between like 2008 and when we first met, I think like 2019-ish?
Yeah. So I would say that in 2008, when I was doing renovation, it was mostly the renovation type was FHA 203K.
Oh, really?
Because
Okay.
at that point, 2008, a lot of people had already had a foreclosure or a bankruptcy or had some credit challenges. And so that FHA renovation loan was like the only option.
Yeah.
So we did a lot of those. And then after some time, new construction came back into the picture. And so then I was doing some new construction, but really just a lot of renovation. So I'd say from 2008 to the time that we met, some construction, but mostly renovation.
Okay.
Yeah.
That's awesome. And then since we met, for a long time, you were doing renovation and then have more recently shifted to doing like primarily new, but still renovation, right?
Yep. Yeah. I still do renovation, but not as much. And I could talk about why. I have clients who call me and who want renovation. And so, with rates being where they are right now.
Is that the primary driver? Like rates have come up and that's hurt renovation, or what other impacts have caused like you to just do way fewer renovation loans?
It's all about the rates.
Okay.
So if somebody's buying a new house and needs renovation, we're still doing that.
Sure.
Because when they're buying a new house, they're taking a rate that's in this current environment. And then the renovation rate is about the same as a regular purchase rate. But if it's somebody who owns their house today and they have a rate of 2.5%, they're not necessarily choosing a renovation loan unless they have zero other options, because a renovation loan requires us to pay off the current first lien. So clients will call me and they'll be really excited about doing a renovation loan, but I let them know right away we have to pay off that first lien. And 90% their answer is, that's not happening.
Yeah.
So, and I get that. So then the other option would be for somebody to do a home equity loan.
And we'll get into that because I'm super interested. I didn't realize you had that much experience doing the 203Ks.
Oh, I'm the 203K queen.
All right. Because I'm curious about those because we've done one or two. And we just haven't done a lot of them because people start to get interested, but then pretty quickly things come up where they don't follow through. So
Understood.
talk about somebody calls you, how do you guide them into the right thing? Because you don't just have one loan program to offer people and they take it or leave it. You really try to understand the people and help them get to where they're going. What kinds of conversations do you have? What do you need to know to help guide them?
Yeah. So first of all is I will ask. So let's just assume that somebody's calling me because they want to do a renovation loan.
Yeah.
And let's assume that they are going to purchase, they found a house
Yep.
and they want that house, except that house needs a renovation. So what I'll do is I'll ask them, okay, you already found the house. What's the price of the house? And then how much money do you have on hand for your down payment? Like, is it $5,000? Is it $200,000? What do you have for your down payment? And then what do you want your mortgage payment to be? And keep in mind that you're going to have property taxes and homeowners insurance in that number. So when you're writing your mortgage payment check every month to your lender, what do you imagine that to be? And so then I'll work backwards and I'll help them figure out. So if the answer is they want to keep their payment under $5,000 a month, I will work backwards and I'll let them know, okay, here's how much your renovation would need to stay under if your house is X amount. So I just kind of do that work so that they can, one, figure out like, are all the numbers really going to work out,
right,
so that the payment is there? Because it's a lot of times somebody will have an idea about purchasing a house, and then maybe they have renovation cost in mind, and let's just say it's $200,000 for the renovation cost. And then we work out all the numbers, but then maybe the conversation about what your payment is going to be, maybe that isn't happening. And then you find out later and
right,
you're like, wait, I cannot make that payment. So those are the pieces that I would want to know. Even before somebody makes an application, if we're just on the phone, that's what I would ask them. And then maybe ask them, what do you think your credit score is, and that kind of stuff.
That makes sense, because just because they can qualify for it doesn't mean they want that payment.
Yeah, exactly. And there are a lot of people who are pretty conservative in what they want their
right,
monthly payment to be, and it's a hard number. So then I stick with that. And then there are people who really aren't they don't really care about the payment, but then we have to figure out, can they get approved for what they want? So
that's great. And so you tend to start backwards to say, here's the payment we want, here's the fixed costs we know, and then this basically can be your remodel budget.
Yes.
So then you've got to go figure out, can you take that remodel budget of whatever it is,
yes,
and turn this house into the house you really want,
yeah,
to live in, and then everything works together.
Yes.
Or if your remodel budget's $100K and you need $600K to turn the house into what you need, it's not going to work.
Right. And then that helps because then they have the cost of what they need to keep it at, so that when they're talking to their remodeler, because they're going to be able to choose who's going to do their work for them, when they're talking to that person, they can say, hey, I have this amount.
Yeah.
That way the conversations can stay nice and clean, because it's really easy I've seen clients when they're walking into a house and there's a lot of things they want to do, and they're maybe pointing out all the things to the remodeler, and they're saying, give me a bid for all those things, and that remodeler does the bid. Well, then the bid's like way more than they imagined, but that's because a lot of things at once add up. But if they can say, okay, remodeler, I have $100,000 to use, and now let's go through it, and then let's look at the things that need to be done, and then maybe add other things if the costs don't exceed, what we're trying to get at. So it really helps.
That's excellent, because I do feel like that's something that's even how we try to work with our clients being design build, because a lot of clients will go out and have an architect draw some amazing drawings and then price them out and realize, oh, these drawings are like 3x what I want to spend.
Yeah.
So I guess I just wasted a lot of time and energy.
Yeah.
How do you see that process playing out? I feel like that's sometimes a difficult piece of the remodeling project process is, this is how much money I have to spend. Let's figure that out and then go design it and not have it be twice what I want to spend.
Yeah.
How do you see that playing out in the different ways that you've seen? Do you see that sometimes derailing projects? Do you feel like people are normally pretty good at that? What do you see?
Well, it's really all over the board. I just have a client that came to mind. It's somebody that I've been talking to for about a year. They know that they want to do a they actually want to build a single family residence and an ADU on some land. And they, I've been talking to them about the cost and whether they could qualify. And like I said, it's been a year. And then finally they have some numbers that they feel are pretty firm. And they make application with me. I pull their credit, and then I'm looking at this because they had not made application yet. We'd just been talking, and so I had there was no rubber on the road. It was just them telling me things. And then I see the application. I'm just like, oh, this is not going to work because their income is this, and they had a co-borrower, but the co-borrower was on a fixed income. And even if everybody was willing to still do the loan, there's no way they could pay for it. And so I called them up and I just kind of went over the numbers with them, and then they said, okay, well, we're going to wait another year. But I was just scratching my head because I'm thinking, how did we get to this point where they actually made application and I pulled their credit, and then the payment was going to be X, and then they heard that payment, and then at that point they decided they weren't ready. But we had talked about the payment. It's just, I don't know. So that's just an example of and even with me as a loan officer, I know that that's why I really need to talk to people about that payment nice and early, and talk to all the parties in the loan to make sure that everybody is on the same page. Because I think in this situation, it was a couple, and then the mother-in-law was going to be also on the loan. Well, the couple and I had been talking, but the mother-in-law came in, and I think and then she's like, oh, this is not going to work.
I've had the same thing happen to us where we're like, there's more than one party involved in a big remodel, because a lot of people want to do multi-generational housing.
Yes.
That makes tons and tons of sense. I'm a big fan of it.
Yes.
But if we're having those conversations without one of the people that are paying for it, and then they find out how much their share is, it's not going to work.
Yes, I think that's what happened. So I think that everybody jumping on a phone call and being able to ask their specific questions really helps when I'm talking to clients.
And so really basic, so we have a frame of reference, like just explain to me how a renovation loan works like I know nothing.
Okay. All right. So you find a home that you want to purchase. You know that you want to make an offer on it. And you can go ahead and make an offer on the home, and then you want to quickly have your contractor come in, your remodeler, licensed and bonded contractor come in and give you a nice firm bid for all the work that you want to have done. And that contractor is going to put a line itemized cost breakdown together. You'll have a chance to pick as much of the finishes as you can in this short amount of time, but as much as you can, so that you're making sure to include all the costs that you need for the remodel. And then if you're going to change any square footage, then we'll need a set of plans. If they're not changing square footage or room count, then we don't need plans. But contract, description of materials, and then I will give those to an appraiser. And I'll give all of those to the appraiser along with the purchase agreement. And I'll say, okay, appraiser, here's this house that they're going to buy for, say, $400,000. And here's the scope of work for $200,000. And the appraiser will go out and give us a value of what that home would appraise for, given that scope of work was completed. So then they look at homes that are in the community that are common or kind of as close to that house as it can be. And it has to be homes that have sold in the last 12 months. So we get this value, it's an after improved value, and then we can close on the purchase. And now that homeowner now owns this house, and the house could be in any condition. It could literally be falling over. Hopefully, if it's falling over, there's not a bunch of rain getting into it and mold, but it could be in any condition. And then the scope of work can cover all the work that needs to happen. So then we would close on the loan, they are now the homeowner, and then all the work can start then. And we hold back the construction dollars, the renovation dollars, and then we give them to the builder as the builder's doing the work. And when the builder's doing work, they'll just start the project. And then maybe a month in, they'll say, okay, I have X amount of work done. I'd like to take a draw. We send an inspector out to make sure those things were done. And then we give the money to the contractor. And we just keep funding the project like that.
That's awesome. So it enables somebody to come in and purchase a house and do a renovation on top of that. That at the end of this whole thing, the house is going to be worth significantly more. And they can basically like purchase it and wrap the whole loan together as if all the work was already done.
Yep.
That's awesome.
Yep. And in most cases, so let's say it's a conforming loan, and a conforming loan size today, it's about to change in 2026, but I think it's like 840,000.
Okay.
As long as the whole loan can stay under 840, that home buyer only has to bring in 5% of the cost to build. So let's just say cost to build is 400 and the home is 400. So you're at 800 acquisition.
Yep.
They would just minimum 5% of 800,000 is their cash to close. So
wow.
Because we're using the after improved value to base that loan on, and that is a great way for somebody to be able to finance more work than they could ultimately pay for out of pocket.
Yeah.
And to get the work done early before they move in.
And do you know what that non-conforming limit's going to move to in 26?
Well, so right now, today, it's 819.
Okay.
And then, I think day one of 2026. Well, right now, we can start taking those higher ones.
So they moved to 840.
Yeah,
in
it's going to
26.
move.
Got it.
Yeah.
Okay.
And I was hesitant when I said 819 because the conforming loan limits changed so much. I remember when it was like $285,000. Changes every year, which is nice.
Yeah, because housing prices have changed quite a bit.
Yeah.
That's
Exactly.
great. And how does the rate you get on a construction loan compare to, like, how's that generally set? Does it compare pretty closely to a 30-year mortgage or a prime, or like, how does that work?
Yeah, so there's two paths. So one is if we're going to do a renovation loan, and if our renovation loan is going to be in that conforming loan size. Okay. So if we go down that path, the interest rate is about a quarter higher in rate than a move-in ready rate. So
that's all. Wow, that's great.
Just about a quarter. And then the closing costs are about, I would say, maybe like $2,000 higher in closing costs. And then if it's going to be a jumbo loan, so if it's going to be over 800,000, or if we're doing a literal construction loan, so the construction loan would be like a home that's ground up construction.
Sure, totally.
And if we're going to do that, then there is the rate. So we have a rate that we lock somebody in at. Mm-hmm. And then when the home's done, we do a free float down to the current market rate. So there's a cap where it can never go higher than a certain amount. But when they're done, we check to see where rates are, and we do that free float down. So I have some clients right now who are done with their projects.
Yeah.
And they had a site-built home. And I think their rate was like, say, 7.25 was their cap, but we just floated them down to 6.375.
That's fantastic.
Yeah.
And do you incur like additional extra closing costs on that jumbo loan, or like what a closing cost looks like?
So if our construction loan and our renovation loan can stay in conforming, we have one closing with one set of closing costs.
Awesome.
And then if the build is going to be, or the loan's going to be over conforming, so over 840,000 is the loan that you need, then it's a 2-time close.
Okay.
And so you have 2 sets of closing costs.
Okay. So it really has to do with whether you are over that conforming limit or not.
Yeah.
So curious, I actually just somebody called the office here, and they're looking at buying a home. And I just went over last night to just look at the house for him to help him out. I don't think they need a remodel, but he's concerned because I figured out we have actually 2 wings, the garage and then a 2-story addition that are not permitted.
Okay.
And done within the last 10 years. Mm-hmm. Are those kinds of things, could they throw issues into a renovation loan, or is that something that could be fixed with a renovation loan?
Yep. Yeah, we could. So if they wanted to buy it and then let's just say there's no permits and we need permits.
Yeah.
We could have them get the permits after closing.
Okay.
And then we could finance that into the loan. And so what they would do is they would work with you to figure out what would be needed, because there might be some work that needs to be done also to make sure that the county can come out and do the permits.
Right.
So you would give them a bid for that, and then we could include the cost of the permits into the loan.
Okay.
And finance it and make it.
So
Nice.
it's not necessarily going to be an issue, and it's really, I would guess, you don't care too much about the permitting, except the county jurisdiction has to sign off on the permitting, whatever they do. So if they wanted to do something to modify this addition, and they didn't really want to pull permits because it would be a big pain because of so much work being done outside of permits, we probably couldn't really do that with a renovation loan. Or
Well, so let's just say that you didn't know that it wasn't permitted, and we were doing the loan.
Yeah.
And then we would only find out that it wasn't permitted when the appraiser went out there. And
Right.
because the appraiser's going to see that there was some work done,
Yep.
and then they're going to see that there was no permits, and they'll put it on the report that says there's no permits.
Yeah.
And then I'd come to the home buyer and say, hey, can you ask the seller if they have permits? And there's none. Okay.
Yeah.
So then we're stuck.
Yep.
So then at that point, your bid to get the permits and do the work would be.
we have to get the permits. And that's really like this guy last night. I told him I wouldn't buy the house if it was me, and there's maybe a couple things he should look at. But they did a 2-story addition, and structurally it looks like a problem. There's a beam that lands on a wall, and I think it's a 6-inch wide beam, and I think he's going to open up the drywall to double check if he's still interested in the house. But I think it's sitting on 1 2-by, not a column that transfers the load. And this is
Right.
part of the reason we pull permits and need permits.
Yeah, so important. Well, and in that case, if he does want to move forward, he's like, I love this house, then you would go ahead and do a bid to make that nice and secure.
Which is almost tear it down and rebuild the whole thing.
Yeah, and that might
wing.
be a lot of money. So, yes. So, yeah, but we could definitely finance that.
But conceivably, taking this guy, he does want to go all the way there. This is a major problem. He does need to spend $400,000 to fix this whole wing of the house. We could go to the seller and say, hey, look, you have an illegal half of your structure. We need to fix it. It's also unsafe. And so it's going to take this much to fix it. So you need to reduce the price here by quite a bit.
Yep.
But because we've this whole thing, the appraisal is probably going to come in low. And so we can do the renovation loan to make the whole deal work for you.
Yes. Yep. Absolutely.
So you talked a little bit about one of the things that derail renovation loans or loans in general is the situation where not everybody was on board with that payment. What are some other things that you've seen? We start down the track, everybody thinks it's going to work out and be amazing, but it actually doesn't work out. And how can people avoid those things?
Yeah. So I think that a lot of the confusion comes when somebody is trying to buy a house and work really fast to have a contractor come in to give them a nice firm bid. So when we're looking at somebody's bid, so a home buyer goes out and they talk to 3 different contractors because they want to make sure that they're choosing a contractor that's in line with what they want. If they're shopping with 3 different contractors, that can take time. And that it's also the contractors are putting their time into putting a nice firm bid together. So that piece can get a little stressful when they're shopping multiple contractors because when they're trying to close on a purchase, the seller wants them to close maybe 30 days, maybe 40 days. Maybe they're going to be really kind and give them 60 days. But the longer that somebody's shopping contractors, that's eating into their time. So I would say before somebody even makes an offer on the house, have that contractor in mind. Like, already have made phone calls to contractors to see which company you like, go maybe look at their work, look at their websites, and just already have that person figured out. And so that piece is important. And then we'll have somebody who, if maybe they don't qualify for much, then we already know your renovations, your total costs for your home and your renovations have to stay under $400,000. Well, then they find a house that's $350,000, but the house needs $100,000 in work. So that's $450,000. And so, but I do have clients who realize, okay, yeah, the house needs $100,000 in work, but maybe we can get it to, livable, safe standards with just $50,000 in work. But then it's really hard. It's very like they're trying to fit a round peg in a square hole kind of thing. So that can be challenging.
Talking about like the contractors, and because people always say like you go get 3 bids, and lots of people want to go get 3 bids, and part of the reason they want to do that is make sure they're getting the best price. You see this all the time. You've seen this for years and years. How do you feel like, what are the things that people do to like find a contractor who's going to do a good job and is actually like the best fit and is successful long term versus not? Like, what would your advice be to somebody looking to find that contractor?
Yeah, so I would suggest that they maybe talk to their realtor and see who their realtor's recommending, and then also to do research on each contractor that they're looking at, their own background, to read reviews.
Yeah.
And really read the reviews. And of course, there's always going to be somebody who says something negative. I mean, my reviews, they're not, I don't have 5 stars. I have close, but there's always that one person. And so read all the reviews and just see if there's like a consistent theme. And then other thing is that when we do decide, like when you choose your contractor, we do make sure the contractor can get registered with us. So we have the contractor fill out a resume, and then we do some research to see, do they pay their people on time? Do they have any complaints with the Better Business Bureau or the CCB? Yep. So we look for those things. And if we see anything like that, we're going to talk to the contractor to learn more about what happened also, because sometimes contractors don't realize there is something wrong. And it's just like somebody who, like, when you have your own credit score, you have your credit report and you have it pulled and you didn't realize that there's this like credit card that didn't get paid.
Yeah.
It happens to everyone. So, so we do that little background. But yeah, I would say also to talk to friends. And if you have friends who have had a remodeler, to see what they think.
And so your recommendation is really, even before we identify the house, you're going to want to do this research and make a decision based on reviews, experience other people have had with the contractor, friends and other people their experience with the contractor, like a history, even like getting qualified with the bank. Not every contractor can get qualified with the bank. And what sounds like you're saying is more than just like compare 2 bids and choose one, choose the middle one or choose the cheaper one or choose the most expensive one. Like, find somebody that's got a track record of success that you can go see.
Definitely. Because once you're involved and you've signed that contract, that's the person you're working with.
Yeah.
Right. And cheaper is not always better. And also just to, I have clients who want to shop with 3 contractors, but I don't always think that's the best thing. I think like maybe 2. But then also just realize that some of these things cost money, right? A brand new kitchen remodel is not going to you can't do that for $15,000. And just to be realistic about things. And
one of the things that I feel like is difficult is sometimes, like, especially when you're in a time pressure situation where, like, we got 30 days to close and we have a very large renovation to, like, get basically designed and priced out to a fixed price. That's actually sometimes difficult to execute on a very large renovation.
Yeah.
Like, sometimes architects take 6 months to actually design all the detail into the space. Have you seen things go incredibly wrong with some of those scenarios where the pricing actually isn't accurate? Or do you feel like there's enough safeguards in place with most of the bank controls that very rarely happens?
Well, I would say it doesn't happen very often. And I will give you an example of one time where it did happen, and it was a significant issue. But so we just make sure that, the borrower knows, make sure to give your contractor the time to put together the contract. If you rush them, there could be something missed. Maybe there's some miscommunication there. So give them the time. And then also we add in a 10% contingency. So if you give us a contract that's, say, $200,000, we're going to add 10% of $200,000 to the budget just to give a little extra money, just in case something comes up. If something never comes up, maybe the homeowner decided to do some change orders. They can use that money for their change orders.
Oh, that's great.
But one time where I remember there was a client, and I think it was probably an FHA 203K. They were purchasing a house. They had the contractor put together the contract, and it was very rushed. And it comes down to miscommunication. So the contractor did not include in their budget a staircase that needed to be built from scratch and to go into a loft area that they really wanted to be able to utilize. It was not on the contract. But the borrower had remembered talking to the contractor about it, and then the contractor remembered them talking about it, but it was never put on the contract, and the contract was signed. And then we did our loan based on the without stairs there. But then the homeowner realized this in the middle of the renovation and still wanted the stairs there. So she had to pay for it out of pocket.
Yeah. And there was we'd already closed the loan and all of that. There was no way to go back and bundle that in very easily.
Yeah, we couldn't make the loan bigger. Yeah. They could definitely use the contingency, but in this case, there wasn't enough contingency to cover everything. And after that, I just realized that it was just a conversation they had in the house, and then it just didn't get put on paper. And it wasn't the contractor's fault. It really wasn't the borrower's fault. It was both of them probably needing to sit down and just say line by line and not feel rushed and stressed out.
Yeah. Yeah, no, I think that's really important anytime you're putting a project together, you've had lots of different conversations between the client and the designer, the client and the contractor about all the different things you could do. But when it comes down to it and you're signing the actual contract, very, very important to review all of the details multiple times to make sure what you're actually signing on is what you really want.
Yeah.
Because it doesn't include half the stuff you talked about, because you talked about all the stuff.
Right. I know we want all the things. And then, I don't know, I'm more of a visual person. So maybe looking at it and reading it doesn't really make sense. But if I could sit back and think about how it'll look, and that helps. But
I think most people are that way. Lots of people will make the contract with a line item description, and then also drawings are kind of referenced. We've decided, instead of having two things that often are conflicting, our contract is basically here's the price, and that includes these drawings, and the drawings of the contract. So you can flip through the drawings and see everything that's included or missing.
That's perfect.
So let's talk about 203Ks.
Okay.
You did a bunch of 203Ks a while ago.
So many.
We've done a couple of them, but there's two different kinds, right? And there's a cap where you have to get a additional consultant involved. Talk to me about just how they work, because it's been quite some time since we've done them.
Okay. So the 203Ks, it's a renovation loan, and 203K is an FHA renovation loan. An FHA is a loan that's created for primary residence. The interest rate's nice and low. It's easy to get qualified for this loan, and you don't really need to bring in that much cash to close. You can have a bankruptcy, a pretty recent bankruptcy.
Wow.
You can have a little bit more recent foreclosure.
And how's the rate compared to, say, like 30-year or prime?
I'd say it's about a half point lower.
Oh, wow. Okay.
The FHA.
And so let's get back to how the 203K works.
Okay. Yeah. So there's two 203K paths. One is if the renovation costs are going to be under $75,000 and non-structural. And then the other path is if the renovation is going to be over $75,000 and or structural.
Okay.
So if we know that they need a brand new roof and new trusses, it's structural. So we're going to put them into, we'll call it the path B.
Yeah. And we determine structural by, like, we need a building permit or we need an engineer or...
Just, so we would rely on the contractor to tell us if it was structural.
Got it. Okay.
So if it's, so let's just say part of the scope of the work is removing a wall. If the contractor states that it's non-load bearing, then we're not going to worry about it being structural. But if it's load bearing, then it'll be structural.
Totally. That makes sense.
Yeah. And so then the difference between the A versus the B is that the AFHA is a streamlined version, and it doesn't require us to hire, or the homeowner to hire, a HUD consultant. And the HUD consultant, their job is to look at the contract that was prepared by the contractor and to also do a home inspection and to make sure that everything that's on the contract is enough to make the home safe and habitable.
Okay.
And so if the cost is under $75,000 and the work is non-structural, then we can do a streamline where we don't have to hire that HUD consultant.
Got it.
But then if we're going higher, then we would have the HUD consultant. And having the HUD consultant's fine. There's great HUD consultants locally, but for the speed, especially if it's a purchase,
Sure.
everybody really wants it to be the streamline.
Got
One,
it.
you save a few $1,000s. Two, you don't have to have the HUD consultant out, which saves some time.
Yeah. That makes sense.
Yeah.
What kinds of things are they similar to what derail renovation loans that kind of derail these 203K loans? Or...
Yeah. Well, I've gotten really good at these 203K loans over the years. In the beginning, because I've been doing them for a very long time, because the FHA 203K, they allow you to have multiple contractors.
Okay.
So you can have 3 contractors, but each of those contractors has to fill out forms.
Right.
And it's really not, most of the clients would want 3 because they thought they were saving money by going out and finding a window person and a paint person and a carpet person.
Yep.
But then each of those people have to fill out forms, and maybe the window person's only installing one window. They are like, I'm not going to fill out forms for one window. You're
Right.
crazy. So you realize that after they've already spent a couple weeks trying to figure this out. So I do suggest that they get one contractor who can put the windows, the carpet, and the paint all on one contract, because that one contractor we only have to have forms signed by the one contractor. And I think that homeowners think that they're saving a lot of money by having each of them. But then I've learned that that's not always the case, that if you have one contractor doing, all the work, it's not necessarily more. So I think that people think that they're saving money by being their own super, or they're figuring it out and saving money, and they're not.
Yeah.
They're not. So then it gets a little harder. So that can derail it. And then if so the FHA loan can be done as a refinance. So if they own it already,
Okay,
great. And if they don't own it and they're buying it, that is great too. However, when they get pre-approved and we give them their pre-approval letter, we'll put on there that says that they're approved for FHA 203K renovation loan. So when they go to make an offer for a house, some realtors don't really know what a FHA 203K renovation loan is. So
Right.
they see it and they're just like, oh, I don't know, this is scary. And then they give it to their client, the home seller, who for sure probably doesn't know what an FHA 203K is. And they're like, I don't know, what does this mean? And so I think that it's really important that if they're going to use a renovation loan of any kind, that the homeowner has the realtor and the lender talk, so that the lender can tell the homeowner, or lender can tell the realtor how the loan works, and answer questions that they can relay to their seller.
That's great. And I really like how with this or the renovation loan, purchasing a house in this way actually decreases risk for everybody, including the client. Because one of the things that we routinely get called for is a scenario where we've got a homeowner, happened like a mile from here, right over in West Lynn. Homeowner buys a new home. During the inspection process, the home inspector flags, oh, we got like some really funky looking framing here over your kitchen. Looks like somebody did some weird stuff with the roof. The roof's also like, oddly, it looks like it's soft in some areas. We might have some structural problems. Realtor, who gets paid if the deal closes, calls contractor that they know. Contractor comes out, walks up in the attic, says, it'd be about $15,000 to fix all this. Right? So homeowner has $15,000 in cash, no problem. Deal closes, realtor gets paid. Contractor disappears because for one reason or another. Maybe they just didn't want the work. They're not qualified to do it. Then they talk to us. And this is not a $15,000 job. This is a massive structural problem that's going to cost $75,000 or more. And if you went about it the way you're talking about, then like everybody's locked in. We know we can actually fix it ahead of time.
Yes.
And it really de-risks it for the client, because this poor lady wasn't planning on spending $75,000 to fix that
Right.
house.
And had she known that in advance, she could have maybe asked for a lower sales price
For
or
sure.
locked. And that's another reason that talking to somebody who really understands what they're doing is so helpful in the beginning.
Yes. Yes. And like it's funny, I feel like the incentive structure sometimes is really important, and locking somebody in as far as like, this contractor is evaluating this and going to do the work, and it's all tied together and we're all signing a contract, and this deal either works, the whole deal, or it doesn't work at all. Is helpful.
Yeah. With sales or purchases, it is a stressful time because you're so excited. You found the house, you really want it. You want all the things to work, and then they don't.
And everything has to happen so fast. And often my experience is the contractors that can move so fast, they move fast because they don't have anything else to do. And they don't have anything else to do because they're really not that great.
Right. Yes, true.
The question is really, what's the difference between a HELOC and a home equity loan?
Oh, okay. So usually a home equity loan is going to be a fixed rate product. And they're going to use the current value of the house as it is today. And then typically somebody can pull up to 80% of that value. So if they have a mortgage already, then their current mortgage plus the new line would have to stay under 80% of the current value. So that home equity loan would be a fixed rate product. And then the home equity line of credit would be a prime plus 2 or something like that. So it would be floating. The rate would be floating tied to the prime rate.
Got it.
And then so the home equity loan, you would get the money, a big chunk of money. But then the line of credit, you kind of use it like a credit card. Mm-hmm. So when you need it, you just grab the money and pay it down. And
with the HELOCs, are you typically limited to that same 80% value, or?
Yep.
Okay.
All of it, mostly just 80% of the current value.
And so if I want to do a remodel and I want to do the entire remodel now, often a home equity loan makes more sense.
Yes, if you have enough equity in your house for the home equity loan amount that you can pull out to be enough, then that's perfect in this environment. If you don't have enough equity and you really want to get the job done, then the next option is to do a renovation loan.
Yeah. And it sounds like if I want to do a big remodel right now, like a HELOC doesn't make a lot of sense at all because that's just like a revolving credit line, basically.
Yeah. So, well, you can get a fixed rate line.
Okay.
Yeah. So you could get it up, but it's all up to 80% of the current value.
Right.
So there may not be enough money in there for you that you would enough to get the project done.
Which is where the renovation loans all come in.
Yeah. And then if somebody does need a line of credit like that, I usually just suggest that they go to like On Point Credit Union because typically there's no closing costs associated with that.
Sure.
So they can just go and apply for it. And then usually they don't even have to order pay for the appraisal. They get an appraisal, but they usually don't even have to pay for it. Low cost.
Yeah. Another question that often people are asking is they're curious about the difference. What's the difference between a cash out refinance and a HELOC?
Yes. So a cash out refinance would be where we would actually get an appraisal and it would be based on the current value. And they're pulling cash out and they can just put that cash in their pocket and do whatever they want with it. And the benefit of a cash out refinance is that now it's a 30-year fixed rate mortgage. The rate's locked. So that compared to a home equity loan. So the home equity loan would usually be done if they already have a current mortgage and they just want to take it a little bit more. So the interest rate's going to be a little higher because a home equity loan is in second position behind a first mortgage. So if something happened and the client couldn't make their mortgage payment and the house had to be sold, that first lender would get paid first and the second would get paid second. So that's why they give you a little bit higher rate. So if it can be a first lien, which would be the cash out refi, it's usually a little bit better rate.
That makes total sense. But you have to refinance and lose whatever rate you've got. So if you've got 2.9, you probably don't want to do that.
Yep. If you have 2.9, you don't want to touch it and you just want to get a home equity loan and then wait until rates get better again and then finance those together at a later date.
That's great. Do you, we have these conversations with clients sometimes, but I'm curious, do you have conversations with people from a financing perspective about should I move versus remodel? Where people are evaluating, well, here I am, I kind of like this house, I like my neighborhood, but I also could move because it's not big enough. How do you talk to them about that and advise them?
Yeah, so when rates first went up, most of the time the people were saying that they were just going to stay where they're at. But now so much time's gone by and people are realizing, we got to live our lives. And so now it's like, okay, well, let's move kind of thing. So, I would just listen to them and just, if they could keep their current house, if their house has a nice rate and they're going to move up, then maybe keep that house as a rental and then make some money on that rental income. And then if you need to pull some money from that house that you have now for your down payment for the next house, we can talk about how to do that. But a lot of people are keeping their current house and then buying the new because they just don't want to give up that really good rate and then keeping it, the exiting house as a rental. But yeah, it's more just like if you really want to move and, people want to move right now so that they can get land, let's say build a house or remodel a house and then add an ADU for their family member. Mm-hmm. And that just needs to happen. And so just do it. And then refinance later when the rates go down, as long as you can make that payment now.
Yeah. What misconceptions do people have that you kind of have to educate them about when they first come to you about how purchase renovation loans work or lending works?
Well, a lot of people have no idea that renovation loans are even available. All kinds of people. I talk to all kinds of people and they're like, I wish I would have known about this 20 years ago or 10 years ago. So yeah, it's just people don't really know about it. And then for purchases, it doesn't take a long time to close a renovation loan as long as your partners, which would be your builder, remodeler, your realtor, your lender, they're all working in sync. We can get a loan closed pretty quickly. And the interest rate isn't that much higher. So sometimes people think the interest rate's a lot higher. And then a lot of people don't really understand that we use the after improved value to determine the loan to value. So that's a really exciting piece to it. And I know for me, one of my first houses that we bought, my husband and I, we bought a house in Portland, and we bought it and then we were going to renovate it. And we were there for like 2 years before we renovated it. So we were living in like this house that needed renovation for so long. And then we renovated it, and then we sold it like 2 months after we renovated it. So we had this beautifully renovated home for 2 months. So if I'd have known about a renovation loan when I bought it, I probably would have done a renovation loan so that I could live there for 2 years in that beautiful home.
Yes. I feel like I also did that with my first house. But I also talk to people. The other thing that people don't always think about is I have seen over the past like almost 20 years that we've been in business that one of the consistents in remodeling in Portland is there are inflationary costs that push prices up every single year. And so if when you buy the house, you can go ahead and do the renovation at that point, you're getting a way better deal on your remodeling than you would if you were to wait 5 years and save up, because those remodeling costs are just increasing every year.
Yeah, that is true. And I was just thinking about another misconception is that in Oregon or like Washington, where it rains a lot of people think, well, I need to wait till it's not raining to do the renovations. However, I've learned that that's not the case when I've talked to remodelers, because there's definitely ways to still do the project. So I'd say, like, if somebody was thinking about it, maybe don't worry so much about the weather, but talk to the contractor and see, and maybe they can help you feel more confident about moving forward in the rain.
Yeah.
Because it rains a lot.
It does, but we all live here and we all have to keep working, and
Right.
we have to figure out ways to make it work.
Yes, exactly.
One question that's interesting is somebody has the amount of cash that they could just pay, for a $400,000 remodel. But sometimes they'll choose to do a renovation loan and finance it. Like, when would it make sense? If I'm the kind of person that does have that cash and I could do cash or finance it, what should I think about to make that decision?
Well, I would look at the interest rate that we could give you for your renovation loan, and then talk to your financial advisor about what you could be doing with that money and make the decision based on that. I will say that most of the time when I have clients who have that money cash and could do it, they decide, okay, Vanessa, thank you. I'm really grateful that you gave me all this information. I'm going to pay for it with cash now, because they've just had time to go through the motions. But then I do have clients that maybe they have millions in the bank, but it's not liquid. And it's in a vehicle that they don't want to touch. And we do renovation loans for people who have tons of money in the bank as well. So yeah, I would say if somebody has the money and they can pay cash, probably just pay it cash.
If it's liquid, then it makes sense often to use it. But if you've invested in a vehicle that it's not liquid, then it's a great way to, preserve that while still getting the remodel you want. Makes sense.
Exactly.
We talked about one of the major mistakes people make, because I feel like I still am surprised sometimes with hearing stories about renovations or things that go wrong. And one of the things I really try to do with the content stuff we make is like just educate people to say like, hey, these are things you should think about as you plan your remodeling project to make sure it's successful. We talked about one major thing before that really screw people up, which is not really paying attention to like what's actually included in the contract. What are other mistakes you see people make throughout the lending and remodeling process that you would say, these are some other mistakes that you should watch out for and do things to avoid?
Well, I would say make sure your credit is good. So have a lender pull your credit or do a soft pull so that you can see, oh, is there something I need to take care of? Well, I have time to take care of it. That piece. And then.
And good to you is what? Over 720? Or
Well, 660.
okay.
If it's 660, I'm happy.
Okay.
If it's under,
You're not
it's
happy.
fine. It's fine. We could do a loan for a credit score. I could do an FHA with a credit score probably at 600.
Okay.
Yeah. But yeah, so yeah, having high credit score, just because the higher, the better rate you're going to have. And so if, like I said, I have friends who I just pulled their credit because they want to do a renovation loan. And there was something on the husband's credit, and it was like a Verizon bill that he didn't even know had been late pay for a whole year. And it took his whole credit score down to like 600.
Ouch.
Yeah. And they're like, they have jobs,
Right.
they pay their bills on time, they have kids in college, they pay for the kids' college. Like, they're doing it. And then that happened. And he just didn't look at his credit. And so I can't stress that enough, is have somebody really look at your credit. And then, and just pick a contractor that you're comfortable with, and if you are shopping for a new home, have a realtor who's comfortable with renovation, somebody who's like, down for the learning.
What separates a good realtor from a bad realtor?
If it's somebody who is doing a home, buying a home that needs a renovation, I would like to have somebody who is confident with it and not worried, and isn't already kind of worried about it being a renovation loan. Like somebody who's maybe done a couple, so that they realize, oh, there is a light at the end of the tunnel.
Yeah.
I mean, for me, I just want to have that confidence, that, that cheerleader helping me. But I mean, if you do have a realtor who hasn't done it, that's fine too, if they're open to communicating with the lender and really hopping on the phone with the lender to learn about the program.
That seems to be one of the commonalities with the projects that I've been familiar with, is when you've got a team put together, that they're all working together and coordinating and communicating, then the sale can happen, the renovation loan can close, you can have success. If the contractor is like, just doesn't want to fill out paperwork and doesn't want to communicate, or the realtor's not on board, or like the team's not functioning well together, then it's just like pulling teeth to like make it happen.
Yeah. And so what I've done over the last few years is, if the homeowners buyer's fine with it, I do an email with them, the realtor and the contractor that they're choosing. And I'm not talking about any of their personal finance stuff,
right,
but it's more, here's what we need for the project, here's what I've collected, and here's the task for the homeowner, here's something for the contractor to do. And that way everybody can see what's missing, and be on the same page. I do that more to keep myself organized, but then know that I talk to everybody, because just as a lender, if, let's just say I'm talking to the home buyer, talking, and then I'm talking to the builder, but I'm not reaching out to the realtor. I mean, I'm busy too. I can't make 3 different phone calls to tell everybody, and so it's just to have everybody on the same page. So I'm like, everybody had their eyes on it.
And that's one of the things that I will say I have loved working with you about, is we haven't always worked with you to do our renovation loans, but you do an excellent job kind of quarterbacking that whole process to make sure that stuff happens and you're able to bring the loan to close so they can have a successful remodel and everyone's happy. Because I can't do that. That's not my job. I'm the contractor providing the right pricing, getting stuff done on time.
Yes.
But you're in that position to like quarterback the whole thing and make sure you can have your, ultimately success for your client.
Yes.
And you do a great job with that.
Thank you. And that's come from years of doing this, realizing I have to take that role. I can't be the passive, let's get it done. Or that it just doesn't work. So I need to really be in control. And I haven't had anybody say, Vanessa, you're in too much control. So
No. I can imagine.
I do it with a smile. And it's for the best.
So talk to me about some of the creative things that you do to help maybe non-conventional people qualify for the financing they want.
when we're seeing what somebody can get approved for, and let's just say they're self-employed, we need 2 years of tax returns. Maybe the income's great, they've been doing great, but they've only been working for 1 year. They have 1 year tax returns. And so I can't use their income, but maybe I can use their spouse's income. And maybe that income's not quite enough for what they really need.
Sure.
We can add on non-occupying co-borrowers. So we can add on, let's just say if you had a mom, dad, brother, sister, aunt, uncle, godparent who wanted to co-sign with you, we could use their income to help offset income that we don't have, that we can't use. So that's something. So once I look at somebody's income and the payment and their debts, and I figure that out pretty fast. And then if they can't get approved, that's what I suggest to them. And usually people are not super excited about having a non-occupying co-borrower or an occupying co-borrower that they didn't plan on having, but it is a means to an end. So lots of times after suggesting that to somebody, after a little them thinking and talking to the family, they'll come back and say, okay, we're going to do this. So that's one path. And then the other path is if somebody has assets, we can do asset dissipation. So we can just do some math to figure out how much they could take from their assets for a certain amount of years and then use that as income. And then also if they are 62 years old or older, and if they have an IRA, we can use their IRA funds as income. And also, if somebody wanted to get a gift from a family member, we can use gift funds as their down payment. So there's a lot of different ways to look at making it happen. So I would say if somebody could talk to the lender sooner so that they can start on that path, sooner the better.
That's awesome. And I love you walking through all of that because I feel like sometimes the difference between a great lender and not an awesome lender is the great lenders like employ those creative ideas and think outside the box and think about all the options to kind of help people get where they want to go.
Yeah.
That's awesome.
We want people to win.
Because not everybody really understands like how mortgage and renovation loan rates reflect or relate to the rates that they talk about in the news. Like, what do you see happening with mortgage rates and renovation loan rates in 2026? And like, how's that going to relate to other factors?
Yeah. So if you hear a rate on the news, or if you go online and look and see what the rate is for a 30-year fixed rate, it's usually, that rate is usually assuming that your loan to value is 80%, you're in a conforming loan size, and your credit score is probably like 760, and it's a single family residence. So if any of those aren't met or different, it could be higher interest rates. So if your credit scores are lower, if your loan to value is higher, you would have some additional hits to the rate. So with the renovation loan is usually just about a quarter higher. And then the construction loan, I would say, is about a half point higher, but has that free float down when the home's done. But both the renovation and the construction rate do take into account the fact that it's renovation and construction, and that's just a little bit of a riskier kind of financial liability for the lender. So they have little hit so the rate's going to be a little bit higher.
Yeah, that makes sense. If they keep cutting the prime rate, like at what point, or does that affect these rates at all?
Yes. So the prime rate, usually our construction loans are based on the prime rate during the build period.
Yeah.
So that would be lower if they went lower. And but not necessarily with the 30-year fixed rate mortgages. We're not seeing that much of a correlation with the interest rates changing.
So it's conceivable if they keep cutting prime rates come down. So I have a new build and my new build rate is pretty great, but then it could even go up a little bit at the end of the new build if they keep mortgage rates higher.
Yeah. Well, so the rate wouldn't go up because when we do it, we lock you in.
Okay.
We give you a cap, so it can't get any higher than where we're locking you in at.
Got it.
But it can get lower.
Awesome. All right. Well, I think that does it. Thank you so much, Vanessa, for stopping by and doing this. This has been great.
My pleasure. Thank you. Appreciate you.